Well, I'll be talking about the bull and then Sharad will take over the bear cases. On the positive side, if you see for IndiGo, the growth guidance that the management has given for FY23, they're saying that the capacity will increase by nearly 55 to 60% compared to FY22. But the high growth rate is also because FY22 capacity was lower due to COVID. But if you still compare it with the pre-COVID level, the growth that we are expecting is close to 13 to 17%. The street is quite bullish about this because it's again a double-digit growth rate coming in for IndiGo. Along with this, the yield commentary that the management had given over the conference call was also pretty strong. They clearly said that in the month of April, their unit revenues have increased by nearly 11% compared to the March exit revenues, and in the month of May so far, it has again increased by 6%. So a strong growth in yields that we have been seeing, which measure the average fare per passenger per kilometer. So that's the second positive point that has come in for IndiGo. The third point that is there is that the company is continuously replacing their older aircrafts with newer aircrafts. Now in the fourth quarter also, we have seen in the past 1 year, we have seen that they have replaced quite many aircraft. In the past 1 year, their older CEO aircrafts with the newer aircrafts, and because of this, what is happening is that the company's fuel cost is coming down, which is a quite positive thing given the high fuel environment that we have been seeing currently. Also, along with this, the fact that international routes have opened up, the management is sounding quite bullish about this. They are saying that the international routes are more profitable than the domestic ones, and over the 5-year period, they're expecting that 40% of the total capacity to go towards international. The current is at around 25%. So they're expecting a strong growth, and they're also saying that they have positioned IndiGo at a very good point to grow the international routes at a much higher rate going forward. And last but not the least, the company is the most strongest airline company in India. Its balance sheet is the strongest in India. It has a net cash balance sheet and a free cash of close to 8,000 crore rupees. And given the current scenario, having a good cash balance for an airline company is a must, and that is what IndiGo has. But there are a few negative points also coming in for IndiGo, and Sharad will be telling us about the same.
Well, yes, the bear case scenario is there, and firstly I would like to point out the losses which is happening. Soumit, the losses have actually been there for the last 9 quarters. 8 quarters have given losses, and that's a big amount. The losses combined way is almost 13,000 crores since COVID. So that is the first point for the bear case. The second point is the fuel prices are at an all-time high. The ATF prices are almost 66% up on a year-on-year basis, and do remember almost 35 to 40% of costs come from the fuel portion of the aircrafts. And of course, do also point out that the rupee has been weakening against dollar and has seen its multi-year lows this month. Apart from this, the passenger load factor is an area of concern, and this is because it's lower, and the management of the airline companies have also stated that the higher ticket prices have actually impacted this interesting passenger load factor. And apart from this, the air traffic recovery rate, which is their analysts are stating that that's growing at a slower rate as compared to the industry rate. And the last case for the bear case would be the competition, which is intensifying. Of course, Akasa has got its air codes, then Jet is also coming in getting their commercial license. So of course, this aircraft space is getting total competition.